Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, the stocks you see on your screen will be the stocks featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, looking at the chart of the markets, you can see we broke out. We did have some economic news this week that the market had been waiting on, starting on Tuesday with the PPI report, and it actually came in slightly hotter than expected. So we kind of had a little sideways movement here, waiting on the CPI report to come out on Wednesday. And the CPI report did come out on Wednesday, and it was a little bit tamer than expected. And while that sounds good, we also have to think about the fact that, gosh, we have prices higher on the wholesale level, but maybe compressing down a little bit on the consumer level. And if companies have to pay more for the goods, but they can't pass it on to the consumer, that can squeeze margins. So that's something to look for moving down the ways. And then we had Chairman Powell that was speaking on Tuesday at the Foreign Bankers Association conference, and he was kind of again not so hawkish. And I commented that I think maybe he gets the CPI report a little bit before everyone else, kind of a conspiracy theory. And then lo and behold, all the people got the CPI number a little bit ahead. But I do think the Fed sees those numbers ahead of time, at least based on his comments. Knowing if we were going to have a hot CPI number, I think it would have been a different conference. All right, so let's take a look at the chart of the S&P. You can see that we did break to the upside, and that was on that tamer CPI report that gave the bid underneath the market. We did break above that wave 3 high, which was also a resistance area. So what was resistance now will it become support? We did get a little bit above that 10-day moving average. You've heard me say it a million times. No security in any time frame gets very far away from the 10-day moving average. So the key is now, can we hold this level? What was resistance? Does it now become support? So I think we're good to go as long as we stay above that level. Remember when we had the dueling zigzags in the past? This was the upward target, just as a reminder, which is one of the cool features of this software. And by the way, if you haven't gotten this software yet, if you've been under a rock somewhere, go to hubb.com. It's in beta version. You get live Elliott Wave charts, so you can watch Elliott Wave throughout the day, and all the things that I share with you here can be done on a live basis or end of day, whatever your preference is. So get a copy of the software. It's free, nothing to download on your computer. It's all web-based, but it's a really cool piece of software. And one of the features that I was just referring to is the fact that when you've looked at a chart before and drawn lines, it reminds you of those. Remember back when we were talking about this symmetrical triangle? We drew that a couple weeks ago. And so it remembers that. And then when you come back, you don't have to go, well, now what was I looking at again? So anyway, it's an awesome piece of software. So get yourself a copy of it. But that's where that zigzag target is, as a reminder, up around 550. So it does seem like as long as we can hold above this area, above that previous wave 3 high, we seem destined to move up to 550. Then I think we're going to have to take another look at things. I still feel like, although this is a positive, some caution is still warranted in the markets. If we look at the ADX, it is moving to the upside. You can see, though, that the positive directional indicator is coming down. That's not so bad when you go through a little bit of consolidation, especially when you were overbought. But the negative directional indicator is ticking up a little bit. And so that's just a touch of a concern there. It's okay for the positive to come down, but you want to see that negative still go down. So there are a little bit of shorts coming in here. But that's the key level, watching above that previous wave 3. And I can give you the exact level here, right at 525. It's the area that we want to stay above to keep this thesis of moving higher in play. Looking at interest rates, so we go look at the TNX, you'll see the rates have been helping. And again, all the lines from that zigzag pattern that we had still there. And you can see we've moved back down. Now, we are still technically in a 5-wave to the upside pattern, and it's not that poorly formed. With a nice zigzag in the wave 3, this is a pretty classic Elliott Wave pattern. So I think we have to keep an eye on that. I'm not really sure what could trigger rates to go this far to the upside. I've been talking about how I feel like the Federal Reserve is playing politics. We talked about that the past couple of weeks. I don't really think they want to do anything, raise rates, lower rates. I don't think they want to do anything before the election. So I'm not sure what could spur this wave 5 to start. We're right at a close to the 50% wave 4 correction. We're in a whole big area here of congestion right around 42.5. So it seems to me like maybe rates just level off a bit. I don't see that we go much lower. I don't see that we go much higher. And I could be completely wrong. I just don't see the Fed making any sort of major moves unless we get some really bad data. If we get some really bad inflationary data, then the Fed, I think, would be forced to perhaps step in and raise rates. Maybe that could spur the 10-year back to the upside. But for now, I think we do some consolidation on rates. Looking at the dollar, it's been cooperating as well, moving back to the downside out of this expanding triangle that we drew. You can see up here the rare expanding triangle. Usually we see the contracting ones like we looked at on the S&P. But sometimes you get an expanding triangle where the point's on the left side and the mouth is on the right. Still works the same way. You get a breakout. And that's what happened with the dollar. We're at a perfect 50% retracement in the dollar, and also not a badly formed 5-wave pattern. So either something bad's about to happen. We do have the spread between the 2s and 10s back over 100 basis points, which is an inverted yield curve. It foretells recession. So it would have to be more than just a mild recession, which is what I think we're going to have. You've heard me say that numerous times as well. I actually thought we'd have it before now, if I'm being honest. But something really bad would have to happen to spur rates to go up, which would be supportive of the dollar moving higher. So perhaps these patterns relabel at some point down the road. We'll have to wait and see if that's how things end up playing out. If we take a look at the chart of the Dow by the DIA, you're going to see pretty similar things here. Also breaking above resistance there at that previous wave 3. So both of them have their wave 5s labeled now. And we're sitting right at that 400 level. So that's the key level to watch here on the DIA. We need to stay above it. You can see it's allowing the 10-day moving average to catch up. So very similar chart to the S&P, and very similar chart on the DMI and the ADX as well. ADX is moving up, so it's showing that there was strength in this move to the upside. But is it starting to run out of steam already? We also have the positive directional moving down. Again, in consolidation, that's no big deal, but the negative's moving up, and you don't want to see that. So I do think there's at least some yellow flags out there with the charts that we have on both interest rates and by the 10-year, the TNX and the dollar, and then seeing the action in these negative directional indicators on these DMIs. So I just think we have to pay attention to that. Looking at the Qs, you would expect that they would break to the upside, which they did on rates coming down, but not significantly so yet. Also in a wave 5, so we're kind of coming back into correlation here. Remember when we had a couple markets in wave 3s and a couple in wave 5s? Now we're getting these wave 5s across the board here. We do have a nice bullish cross here between the 10 and 30 moving averages, but the other concern here is that this wave 5 is already extended 136%. That's a pretty extended wave 5. And we're at the very top of the tap box, the time and price projection. So we traded right through the middle of it for a couple weeks, and then we broke down, held support at that previous wave 3, broke above resistance here. Same story. Can we hold this level? Does it become support now? And that's 450 that we're looking at on the Q. So that'll be the key to watch. So can that wave 5 extend further? It can. We usually don't go a whole heck of a lot further than 136%. So either we're going to run out of steam here soon, or these charts are going to relabel and that 5 will turn back into a 3. I don't really think that's going to happen either. I think we're going to have a little bit more of a movement to the upside, and then perhaps a pause, maybe right after the election, et cetera, maybe beforehand. Who knows? But I just think I don't want to say this is not a time to back up the truck, load the boat, whatever, any of your favorite expressions. Looking at the IWM, we're right up here to the 210 level. That's going to be the key. Can we break above 210? Very similar DMI here. So yes, there was strength in the move up to resistance and even breaking it in some of the markets. We haven't broken resistance on the IWM yet. We're right at it at 210. Can we get above that level? Can we break resistance on the IWM where the other markets, S&P Dow and the Qs, already have? A lot of people look at the small caps as an indication of risk tolerance in the markets. They'll risk on, risk off, and we will need to see that break above that 210 level. But once again, we're right in the middle of that projected tap box there where the wave 5 was supposed to go, and that's exactly where it went. Now, the wave 5 hasn't extended more than 100% here, so from that point, you could say one of two things. You could say that maybe that wave 5 is done. It didn't go past 100%. If you know the Elliott Wave rules, you know if the wave 5 doesn't exceed 100%, you come back to the previous 4. Well, maybe that entire pattern is done and complete because we did have a wave 5 less than 100%. We've already retraced back to the previous 4. Perhaps this is the start of a new impulse move here. It hasn't been labeled yet. The algorithm hasn't been labeled it. And as a reminder, the software is programmed exactly to the algorithm as Ralph Nelson Elliott wrote it. So perhaps we're just in some sort of a new impulse move. We had the corrective triangle after it. So all this is classic Elliott Wave stuff on the IWM. So I think that 5-wave pattern's complete. I think we did the retracement. We had the corrective pattern after wave 5. Usually get a flat zigzag or triangle. So we had a triangle. And I think maybe we're in a new impulse move. Now, is it going to be a zigzag? Is it going to be a flat? In other words, will we run into resistance and come back down to 190? That's the question that has to be asked, I think, on the IWM. And another cool thing, we now have the cryptos in the software. We have access to them. Everyone else will have it very soon. We just got these, so this is really cool. They're continuing to add things. Bitcoin is trying to make a little bit of a break. You can see that we have this descending triangle here, and it does look like maybe Bitcoin is trying to break out of it. I don't think it's a big enough move to really 100% call it a breakout. It sure looks like it, but we'll see over the next couple of trading days or the next couple of days when it comes to Bitcoin, whether or not we can continue this upward move. If you're long Bitcoin, you've heard me say this before too, you want to see it move in a 45-degree angle. You don't like those vertical spikes because just like over here, when you spike up vertically, you often come vertically back down. So we're getting in all those general rules that I talk about week in and week out here about Bitcoin. So we always show Coinbase along with Bitcoin, and it hasn't really broken out the way Bitcoin has yet. A little bit surprising to me, but we are holding above that important level of 200. You see this arrow? And I was just reminding people that if we can't hold 200, we'll make it down to 150 really quickly because we move from 150 up to 200 so fast. So if we break 200, then watch out. 150 is next on Coinbase, but we're not there yet. Pardon me. So far, we're holding 200, and that'll be the key to watch. Can we continue to hold that 200 level? All right, now let's take a look at some stocks of interest. In Tuesday's TradeFinder, we were asked about UNG. Gosh, we haven't talked about natural gas for a while. And by the way, if you haven't signed up for it before, you can sign up now using the link that you see on your screen now. We do TradeFinder every Tuesday, and now we do it live during market hours. So you can see the live charts, you can see live Elliott Wave in action. We talk the markets, we look for trade ideas, and we have a live Q&A. We have a great community. Love to have you join us. So sign up for TradeFinder. So people have been asking about that. In addition, as a reminder, on these U.S. market updates, every month this year, we are giving away one of our level 3 subscriptions, and that includes our impulse or directionally based strategy, which is infused with AI, a volatility strategy, which looks for breakouts from triangles, and our time strategy, which is a kind of an income strategy. It looks for sideways moves, also AI based. And when you package them together, it's worth thousands of dollars. And we're giving away one of those every single month this year. And all you have to do to be in the drawing is to leave a comment underneath this video. So you can ask about a stock, you can leave comments about Chuck Norris, whatever you want to do, but just leave a comment under here and you're automatically registered. So good luck to everybody. That was one of the questions. And I do want you to know, or one of the comments, I do want you to know I read each and every comment. I answer as many as I can, time and travel permitted. So this has been a topic this week, both in TradeFinder and in last week's U.S. market update. And you can see why. Finally, we're getting some breakout new movement in UNG. We've been in this trading range here between 15 and 17 and a half for months. We held this 15 level, good area of support, but we couldn't get above 17 and a half until now. Now, after today, we're slightly overbought, not too much, but a little bit overbought. You can see that the wave 4 is labeled there. This is not necessarily a classic wave 3, is it, with this move down here? So this is more of a zigzag right here, and I would not be surprised to see this 5-wave pattern relabel. We'll wait and see. But even if we are in the wave 4, which would suggest even lower movement in UNG, I don't know if that happens because this looks like a pretty strong breakout to me. And if you look down here at the DMI, it's confirmed with a very strong ADX. That's the kind of separation you want to see that we're not seeing in the regular markets on the two directional indicators. See how the positive directional indicator is moving up, the negative is moving down, and we have good separation there. If we were seeing that in the markets, then I would say, yeah, we're off and running. I just think we still need to be cautious there. But finally, after a long wait, we're getting a breakout of UNG. So everybody's going to want to know, well, where do we go from here? Well, we don't have too far to go before we run into some resistance. There is resistance right there at 20. You can see we traded through it back here at the end of last year. We traded through it again at the beginning of the year into January, early February. And so that's some congestion. It's not a tremendous amount of resistance, but maybe we hold here for a little bit on natural gas, allow that 10-day moving average to catch up, and then we'll see. Because if we can break above 20 on UNG, well, then we have something going because there's nothing in the way of that up until 27.5. Again, a big vertical move lower, so it doesn't create any resistance in the way on the move back up. So that's the opposite of what we were talking about before. But we got to get above 20 first. So that's the key level to watch on UND. Other stocks that y'all ask about, iRobot, almost a similar chart to UNG where we had this long consolidation, not in a 5-wave pattern, no Elliott Wave labeling here. We did have a breakout. We came back and tested it. Once again, breakout 2 vertical. You want it more on the 45-degree angle, vertically up, right back down. But so far, we've held the 10 and 50-day moving average. The other thing is that we did get some support here in this $10 level. If you've heard me talk about this before, it's very important from an institutional standpoint because stocks that are registered growth and income can own stocks that trade at $10 or higher. You have to be registered as aggressive growth to own single-digit stocks, and that brings you down to the $5 level. So we held 10. So there's obviously some institutional ownership here, and they came in and supported it. That's probably why we had this big move. They said, oh, yikes, we got to get back above 10. Because what happens is if we stay below 10 for too long, the institutions are then forced to sell that aren't registered as having aggressive as their investment objective, and they'd have to take the loss, and they don't want to do that. So what they tend to do is come in and support it, get it back above here, and then they can wait it out with the long-term buy and hold type of a theory. So we'll see if iRobot can hold 10 now and try to make another bounce, maybe not quite so vertical, and move a little bit higher from here. A couple of the other sectors to look at that you guys have asked about, healthcare, both of these are more in the defensive area, and we're seeing a bit in both of them. We also have the same kind of DMI here, though, that we had on the markets with here the positive directional indicator going down and the negative going up. But could be that we're just running into a whole bunch of resistance right here at that previous wave 3 high. We had, call it the 38.2% wave 4 correction. That would look for a 61.8% extension. We have to break above this resistance area. We had a little separation a couple days ago from the 10-day moving average, but these sideways days are allowing that to catch up. So maybe we can break above this next week, but that would be key to watch. Can we get above this 146 level, above that previous wave 3 on the XLV, and perhaps we move higher? Again, if there's concerns about recession, the markets, etc., money moves into defensive-minded sectors. This is one of them. The other one, which has had a strong bid, is the XLU in utilities. So big move to the upside there, almost a little too vertical there, but it is confirmed with the DMI, very strong ADX. Remember, the ADX measures the strength of a trend. So we're talking about uptrends now, but even if we had a downward move that looked like that, the ADX would still go up. So the ADX doesn't determine direction. The two directional indicators do. They tell you who's in control, buyers or sellers. The ADX just tells you the strength of the trend. And we're up above 40, so that was a very strong move. What that means is that the strongest part of that move is over, but it doesn't necessarily mean the entire move is over. So we could go higher, but if we go higher, it will be on less strength than the move we had so far. So that's a quick little course there on the DMI and the ADX. So I think maybe we level off here a little bit, and if we move higher, it's more of a creep higher rather than this strong move that we had. And to me, that's institutions coming in, that's market rotation, that's money moving in to these defensive sectors and getting away from some of the high beta stuff, even though they enjoyed a little bit of a bid here with rates coming down. Guys ask about Pinterest, so we'll look at that. Nice move to the upside here in Pinterest on their earnings report. Big move higher. Also have a pretty strong ADX here, but it's getting above 40 as well. So same story there as we had on the XLU. The strongest part of the move is over. But on here, the difference is the positive directional indicator is moving back below the ADX. So that's another signal that perhaps the majority of this move is over. Again, if we move higher, I think we creep higher. Someday we'll come down and fill that gap. Our AI data tells us 94% of gaps get filled. You just don't know when. Sometimes it can be a while. Sometimes it's quickly. But when you have a big breakout like this from an earnings report, you usually don't come right back down. So I don't know that we're going to have any sort of concern here with that. Maybe down out in the future, we have a bad earnings report and it brings it down. But for now, nice breakout here. If you're long Pinterest, and that's why you ask about it, you feel good if you stay above 40. So that's your key. As long as you hold above 40, you can see if you get a continued move higher from here. If you break down, I wouldn't even be concerned about a move back to 40 because that would just be testing this area here that was resistance back in February and see if it holds a support. But any break of 40 and you got to get out. So do you have the stomach to handle a move from 42.80 back down to 40? That would be a key that you would have to decide on your own, obviously. Looking at oil, and gosh, I hate to show you this, but oil is catching a bid here, at least on the USO. And I've joked before about the cars that I drive. You can see them on my website. None of them are fuel efficient. I like the old big V8s. I'm an old school guy. And I don't like when the gas prices go up at the pump. I've joked about this before. You know how it works. When oil prices go up, you seem to feel it at the pumps the next day. But when oil prices come down, it takes weeks, it seems, before prices at the pump start to come down. But as a reminder, we had this absolutely perfect zigzag pattern down here. 61.8% B wave correction yields 100% extension, and we just hit the floor there right at 75. OPEC, I don't think, wants the USO to go below 75. They've been out talking about how they can see the end game. They know they have a limited supply in the ground, and they want to make as much money as they can with the supply they have left. They don't want to see oil prices go anything down like they did back in the pandemic era. So we have also here, I've just seen so many more of these over the last couple of years than I had seen in the previous 10 to 20 years. There's another expanding triangle. Once again, points on the left side, mouth on the right side, but it's still the same thing. It still yields a breakout. So that could be foretelling that that we continue to the upside in this wave 5. The wave 4 is not only right here at that 100% zigzag extension, it's also right at a 50% correction. So you could do worse, I think, if you're looking for a place to go long than oil. I think that sets up pretty well for a continued move to the upside. And we'll wrap things up with SLV. Another big day today. The metals are breaking out. I like the chart SLV better, although we're rapidly catching up to the vertical moves that GLD had. But once again, look at the zigzag pattern. It reminds you, as I talked about before, we had the B wave correction, not only right at 50%, but dead on the 50-day moving average. And we're moving up in the C wave. Now, on today's move, we're getting a little bit overbought. We did a couple days ago right here. We actually had an alert for our alert subscribers at Evo Trader. Took that off, went sideways, and then, yikes, looks like maybe we took it off a little bit too early. But you can never be upset with a gain. You take a profit, be happy with it. Don't second guess yourself, or you'll go nuts in the trading world. But we're a bit overbought now, so I think we'll get another opportunity. I think we're going to go sideways, maybe drift back down, maybe fill this gap. I think if we were able to, and maybe that's asking a little too much, but if we were able to come back down on SLV and test this A wave high here and fill this gap, that would be a great entry, and then you get another chance at this. So oftentimes when you get these vertical moves, don't kick yourself if you miss them. I'm not, because I know that when it moves vertically like that, we're going to get a retracement and we'll get another opportunity to get in. But certainly a massive breakout there. And we look at the DMI, you couldn't really ask for much better as far as confirming the move. So there's very good strength to this move on the SLV, but I don't think this is one to chase right now. You're looking for something sooner. I think USO is where you want to look. But let's keep an eye on SLV and see if we get another opportunity with maybe some consolidation and backing and filling next week. Hope you have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.